Yeah, well, I think they'll get to the bottom of it, but it just shows you how vulnerable our society can become, and it's going to happen more and more. There's a much bigger economic collapse coming, and people have to recognize that just because it hasn't happened yet doesn't mean it's not going to happen.
Do you think we'll see a stock market crash?
Stock market can always crash. I mean, it's very expensive because in order to prevent the stock market from crashing, they'll just print a bunch of money. And so we end up with a dollar crash instead of a stock market crash. And that's what I'm more worried about. The disaster that we're headed towards in the future is going to be not only much worse than what we experienced in '08, but much worse than it would have been had the government done the right thing and not interfered in the process and allowed for an even bigger decline in the stock market, allowed for an even bigger decline in the real estate market. And there's a commercial real estate crisis. I think the entire banking system is completely insolvent right now. It could collapse any day. The country is in a lot of trouble. We have been able to succeed in kicking the can down the road. We've delayed that inevitable collapse. It's coming. And every time we delay it, we just make it worse.
Today, we are delving into the economic predictions of a man who has been both lauded and criticized for his audacious forecasts, Peter Schiff. If you're familiar with the financial realm, you'll know that Schiff openly shares his views on the looming economic collapse. Here's the exciting part. He also has strategies that he believes can turn you into a millionaire during the turmoil. So stay tuned, because you won't want to miss this.
There's a much bigger, economic collapse coming. And people have to recognize that just because it hasn't happened yet doesn't mean it's not going to happen. And people should try to be prepared for it.
Peter Schiff's perspective on an impending economic collapse is rooted in his analysis of financial systems and government policies. He argues that the global economy, particularly the US economy, is fragile due to excessive debt, unsustainable consumption, and prolonged government intervention. Schiff often likens the economy to a drug addict, dependent on monetary drugs like easy credit and government stimulus, rendering it unable to function normally without them. Schiff's main concern is that the government and central banks have been postponing the consequences of poor economic policies by injecting more liquidity, increasing debt, and further distorting the economy instead of allowing the market to self-correct during crises. He warns that this cycle of growing debt and artificial consumption is unsustainable, predicting a massive economic correction. Schiff believes this correction will result in severe economic turmoil, potentially worse than past recessions. One of Schiff's most critical views targets government spending and entitlements, such as Social Security and Medicare, arguing that these programs are unsustainable and comparing them to Ponzi schemes. Before we dive back into Peter Schiff's insights, make sure to subscribe to our channel for more in-depth analyses and updates on crucial financial topics. Your comments also help us tailor our content to your interests, so feel free to share your thoughts below. Now, let's get back to Peter Schiff and his compelling predictions.
It was a horrible deal to begin with, but again, the public was duped into it. They believed the lies the government was telling them about how this was a big insurance plan, and the government was supposed to take the money and invest it so that the investment returns were supposed to pay the benefits, right? It wasn't supposed to be a Ponzi scheme, but of course it was a Ponzi scheme from day one. The government lied to the public about the nature of Social Security. It was really a gigantic fraud. They tried to make it sound like it was an insurance plan. That's why they call it premiums, beneficiaries, trust funds. But the whole thing was a lie from the very beginning. And it's about time we told the truth about Social Security. I mean, it's too late now, but we should have told the truth decades ago.
Peter Schiff argues that programs such as Social Security and Medicare are funded by the taxes of current workers, which are then used to provide benefits to retirees. As the population ages and the number of workers per retiree decreases, the pressure on these programs will become increasingly unsustainable. Schiff advocates for major reforms, including means testing benefits and eventually phasing out these programs to lessen the burden on future generations.
Nobody sees the relationship between the borrowing of the money and the inflation that comes down the line and how that impoverishes them anyway. I mean, the inflation tax is how we're paying for all of the government spending that we're not paying for with taxes, because we have to pay for it somehow. We don't get any government for free. The only question is, how do we bear the cost? And it's actually cheaper to pay the taxes than to suffer the inflation. Inflation taxes is actually worse.
Inflation is another major concern for Schiff, who views it as a hidden tax on the public. He explains that when the government spends beyond its means and finances deficits by creating more money, it leads to inflation. This devalues the currency, reducing the purchasing power of people's savings and wages. Schiff argues that this form of taxation is more damaging than direct taxes, as it distorts economic signals and worsens underlying economic problems. He believes that the extensive money creation during the COVID-19 pandemic has left substantial liquidity in the system, further contributing to these issues.
Tremendous amounts of money was created during COVID, and we've barely, withdrawn much of that liquidity. It's still there, and now they're adding to it, and it's going to continue because the interest burden on the national debt is already now about $1 trillion a year. It's going to be $2 trillion by the end of next year, but the government can't pay that, and it's not going to stop there. I mean, we got almost a $35 trillion national debt. But as that debt matures, it has to get rolled over at higher rates. Meanwhile, we're running $2 trillion per year plus deficit. So we're adding a couple of trillion. And that's, without an official recession. The potential is for the annual deficits to go to 4 or 5 trillion. And then we got to finance that. So the numbers are just so large at this point.
With the national debt nearing $35 trillion and interest costs escalating, Schiff forecasts that annual deficits could soar to $4 to $5 trillion, placing a financial strain on the government that it cannot manage. He suggests that, in this scenario, inflation becomes the sole viable solution for bankers and politicians. Schiff argues that paying off the debt is not feasible, and there's a lack of transparency and willingness to default. As a result, the only recourse is to generate inflation. He believes that policymakers will blame inflation on external factors like greedy corporations, OPEC, or foreign leaders, while avoiding accountability for its origins. So do you think a stock market crash is imminent? Schiff's perspective might surprise you.
Stock market can always crash. I mean, it's very expensive. And so if it were just to revert to the mean, that's a big crash if it went there quickly. So it's always possible. But it seems unlikely because the Fed can always interfere by creating more money. And so we end up with a dollar crash instead of a stock market crash. And that's what I'm more worried about is the dollar crashing, not the stock market. Because in order to prevent the stock market from crashing, they'll just print a bunch of money. And so it's the dollar. So the price of your stocks don't go down that much. But the value of the money that you get when you sell your stocks, that's what goes down. Right. Or the value of the dividends, to the extent that you have a dividend on your stock. Of course, a lot of stocks don't pay dividends at all.
Schiff believes that a stock market crash is always a possibility due to its current overvaluation. If the market were to revert to its mean quickly, it could result in a significant crash. However, he thinks a stock market crash might be less likely because the Federal Reserve could intervene by creating more money. Instead, Schiff is more concerned about a potential crash of the dollar. He worries that to prevent a stock market crash, the Fed will print excessive amounts of money, which could diminish the value of the dollar. As a result, even if stock prices remain stable, the real value of your returns both from selling stocks and dividends could decrease dramatically. Now, let's examine what happened before the great financial crisis of 2006, as Schiff believes we are heading toward an even greater disaster.
And so I think a lot of money that was going into the dot-com stocks was going into real estate. And, real estate was already rising before 2000. It started to go up like 96, 97, 98. But what happened after 2000, when the stock market crashed, there was a little bit of a pause. But then real estate just took off because a lot of that money, and what really ignited it was the Fed took interest rates down to 1% after the stock market crashed. And then what people did with all that cheap money was buy houses, because now you can get a teaser rate on a 30-year fixed rate mortgage where for the first few years your payments was 2% or 3%, and people had never seen mortgage rates that low. Prior to 2008, mortgage rates were like 8%. We're headed towards, in the future, is going to be not only much worse than what we experienced in 2008, but much worse than it would have been had the government done the right thing and not interfered in the process and allowed for an even bigger decline in the stock market. allowed for an even bigger decline in the real estate market and allowed for a real healthy restructuring of the economy back in 2009, 2010, 2011. Instead, we just made all the underlying problems that caused that crisis much worse, which is why the next crisis will be even worse than the last one. But today, I argue that the banks are in much worse shape than they were in 2008 when so many of them failed. And that's because they're losing money on all their mortgages. Every mortgage that they own, they're losing money on because they're sitting on mortgages where they're earning 2, 3, 4%. But their cost of money is 5%, 6%. So they're losing. They're not getting money at zero anymore. So mortgages that were profitable when interest rates are at zero, they're losing money on. And so it's not just the mortgages that are defaulting. In fact, if somebody defaults, that's a relief for the bank. Right? Whenever somebody refinances their mortgage and they were paying $3,000 a month and now they're only paying $2,000 a month, that's a huge loss for the lender. Now, the only reason the lender was able to eat that loss was because the Fed had rates at zero. But I kept saying they're not going to stay at zero forever. What's going to happen to the banking system when interest rates go up and the banks are sitting on all this underwater paper? Well, we know Silicon Valley Bank, Signature Bank, these banks started to fail. And more banks would have failed if they didn't come up with this bailout plan. But I think the entire banking system is completely insolvent right now. And it could collapse any day.
So what's the solution? How can you protect yourself and potentially become a millionaire amidst this chaos? Schiff advises leveraging the current economic situation by securing a 30-year fixed-rate mortgage. He suggests borrowing money at 3% for 30 years, as inflation will reduce the real value of this debt over time. This means your payments will stay low, and you'll financially benefit as inflation rises. While Schiff's predictions are controversial and not universally accepted, his strategies are worth considering, especially if you're looking to navigate a potential economic collapse.